In 1720, one company's stock made an entire nation rich on paper in just 7 months. Then, it erased nearly all of it before the year ended. Even Isaac Newton, one of the smartest men alive, lost a fortune. Picture an old man in a quiet study, holding a single piece of paper that just hours ago was a fortune. His name is Isaac Newton, the man who measured the motion of the planets, and now he cannot sell this paper at any price at all. Newton was master of the Royal Mint, the man in charge of England's coins. He was careful, brilliant, the last person you would expect to gamble. And yet he had poured around £20,000 into one company, a sum worth millions in today's money, and watched it vanish. Later he would try to explain what had happened to him, and the words have lasted 300 years. He could understand the stars, he admitted, but not the madness of ordinary people chasing easy riches. And Newton was not alone. In just 7 months, in 1720, the share price of one company climbed from £128 in January to nearly £1,000 by early August. An entire nation suddenly felt rich. Then it all came apart. By December, the same shares had crashed back down to around £124, wiping out 80 to 90% of everything people thought they owned. The paper fortunes simply evaporated. The wreckage was everywhere. Dukes were ruined, widows left penniless, and across London a wave of suicides followed the crash as people faced debts they could never repay. It reached the very top of government. John Aislabie, the Chancellor of the Exchequer, the man who ran the nation's money, was dismissed in disgrace and locked away in prison for his part in the scheme. But here is the strange part, the riddle at the heart of it all. This company barely traded anything real. So what exactly was everyone buying? The answer hides inside a war, a mountain of national debt, and one ruthless idea. And that is where our story begins. The year is 1711. Britain has just clawed its way out of a long and brutal war against France, the War of the Spanish Succession, and the country is exhausted in every way that matters. But the deepest wound was not on any battlefield. It was inside the treasury. The country owed staggering sums of money, borrowed from a tangle of different lenders, and nobody could even count it all cleanly. The national debt was a monster no one fully understood. Then came the idea that would change everything. A brand new company was founded that same year, given 2 jobs at once. First, swallow great chunks of the government's messy debt. Second, sail west and trade with the rich Spanish-controlled Americas. They called it the South Sea Company. And at the center of the dream sat one golden promise: a contract with Spain, the Asiento, to supply enslaved Africans to Spain's colonies in the Americas, 4,800 people every year, for 30 years. Everyone assumed this trade would unlock oceans of New World gold and silver. The Spanish colonies were famous for their riches, and now a British company had a door straight into them. The mere idea made men dizzy. On paper, it looked like a perfect machine. The company would take on the government's debt. The government would pay it interest every year. And on top of that steady income, it would earn trading fortunes across the sea. Investors lined up to buy in. But here is the quiet truth buried under all that shine. The trade was a lie, waiting to be discovered. The voyages were few. The profits were tiny. The mountains of South American gold were a fantasy that never came. And yet, none of that mattered, because the company was not really selling ships or silver. It was selling a dream, and the dream sold itself, long before anyone thought to check whether it was true. Early in 1720, the company made its boldest move yet. It walked into the heart of British finance and offered to swallow almost the entire national debt, about £32 million, in exchange for $7.5 million in cash paid to the government. It was a bidding war, and the company's rival was the mighty Bank of England itself. The two giants pushed their offers higher and higher, each trying to win the right to handle the nation's debt. And in the end, the company won. Then Parliament said yes, and overnight, the company was fused to the British state itself. The king publicly backed it. Leading politicians backed it. It no longer felt like a gamble. It felt official, safe, unstoppable. And that changed everything. Because now, to doubt the company was to doubt the crown. If you whispered that something was wrong, you were not just questioning a business. You were questioning the king, the parliament, and the nation itself. Behind all of it stood one man, a director named John Blunt, a relentless, scheming salesman, calm and patient, who understood a strange and dangerous truth. The company did not need real profits. It needed only one thing, a rising price. Here was his trap, and it is the whole secret of what followed. The company turned government debt into its own shares. Each debt holder handed over their loan papers and received company shares in return. And here was the cruel beauty of it. The higher the share price climbed, the fewer shares the company had to hand out to settle each debt. Every leftover share was pure profit, theirs to sell again. So Blunt had one job, and one only: make the price soar. And the price began to move. In January, a single share cost £128. By March, it had reached 330. The fever had begun to spread through London, and John Blunt was only just getting started. Then, John Blunt did something no one expected. He let people borrow money from the company itself to buy the company's shares, and the thing they put up as security for that loan was the very shares they were buying. Look at the trap inside that idea. You borrow, you buy, the price rises. Now your shares are worth more, so the company lends you even more. You buy again, and the price climbs higher still. The money was feeding itself. Borrowed money poured into the stock like a flood. By May, the price had reached £550. People were not buying with what they had. They were buying with money they did not yet own. And now, the whole city lost its head. Dukes and duchesses, priests, shopkeepers, even servants squeezed into the narrow lanes of Exchange Alley, all of them desperate to buy before the price climbed again. Where there is greed, there are imitators. Dozens of new companies sprang up overnight, each promising some absurd venture, each begging for your money. They were called bubble companies, and people threw cash at them too. In June, Parliament passed a new law, the Bubble Act, and it was the South Sea Company itself that pushed for it. The law made it hard for rival companies to form. They sold it as protection for honest investors. But the law did not protect anyone. It strangled the competition. With the rivals gone, only one name was left standing, and now South Sea looked like the single safe place to put your money. There was nowhere else to go. Then, in early August, the peak. One single share now cost about £1,000, nearly 8 times its January price. The whole nation felt rich on paper. And Isaac Newton, who had sold out and watched it climb, bought back in near the very top. At the very top, the men who built this whole machine did the one thing they never told anyone to do. While the public still pushed their savings into the company, the directors quietly sold their own shares for real gold. These insiders knew what no eager buyer in the street suspected. The river of South American gold and silver that everyone imagined did not exist, and it never had. The whole fortune rested on a trade that was almost empty. With the clever money already gone, something simple and deadly happened. The buying just stopped. There was no one left eager to pay more, and a price that only ever climbed because people kept climbing had nothing left to lift it. Then the first cracks opened, and the borrowed money machine threw itself into reverse. As the price slipped, the lenders demanded their loans back. People who had borrowed to buy were forced to sell, and their selling pushed the price down even faster. Now, the real fall began. By September, a share that had touched £1,000 had crashed to around 150. By December, it sank near 124. In just months, roughly 80 to 90% of the value was simply gone. The same trick that lifted the price now destroyed the people who used it. Those who had borrowed to buy now owed far more than their shares were worth. They were not just poorer, they were buried in debt they could never repay. The collapse spread outward, like cold through a body. The banks and goldsmiths who had lent against the stock found their security was worth almost nothing, and many of them collapsed too. Dukes, clergymen, shopkeepers, and servants, every rank of society was ruined, and across London the despair turned darker still. As fortunes vanished and shame closed in, the number of people taking their own lives climbed sharply. The dream that had made a nation feel rich left behind a city full of grief. When the dust settled, the country wanted answers, and it wanted someone to pay. In late 1720, an angry parliament opened a formal inquiry, demanding the South Sea Company hand over its books. Investigators pried open the ledgers and found names where they should never have been. The company's own accounting had been hidden, doctored, and in places simply destroyed. Someone had been working hard to keep a secret. And there it was, the rot beneath the dream. Ministers and officials of the royal court had been quietly handed shares on special terms, never paid for, simply gifted. These were bribes, payment for pushing the original deal through Parliament. The blade fell on the man who held the nation's purse. John Aislabie, the Chancellor of the Exchequer, was found to have taken his cut. He was thrown out of office in disgrace and locked inside the Tower of London. The directors were next. They were arrested, and the law did something rare. It seized their fortunes, estate by estate, to pay back the people they had ruined. Their grand houses and lands were carved up and confiscated. Out of the wreckage rose one steady figure. Robert Walpole had warned against the madness, and now he managed the collapse calmly. From this ruin, he climbed to become Britain's first true Prime Minister. But the panic left a lasting scar. The Bubble Act, rushed through to crush rivals, stayed on the books for more than a century, quietly choking the growth of new joint stock companies until it was finally repealed in 1825. As for the company itself, the one that promised oceans of gold, it never truly traded again. It limped on for over 100 years as a hollow shell for managing government debt, finally dissolved in 1853, a quiet end to a loud disaster. Look back now at the whole rise and fall, and you find something strange at its center. There was never any treasure. What every duke and servant and clergyman was really buying was a feeling that something blessed by the government simply could not fail. That was the belief that held it all up. Not earnings, not voyages, not gold, only the quiet agreement of a whole nation that a thing everyone admired could only ever rise. When that agreement broke, there was nothing underneath it but air. And so we end where we began, in a quiet room, with the man who measured the heavens, holding a piece of paper worth almost nothing. Isaac Newton, who weighed the stars, had been undone by the one force he could not put into a calculation, a crowd that forgot to ask what it was buying. He had bought back near the top, on the surge of the rising price, and rode it all the way down. Later, asked about the disaster, he gave the only answer that fit. The motions of the planets he could chart. People, on borrowed money, climbing toward a fall, those he could never solve. The South Sea Bubble was never really about trade. If you enjoyed this story, subscribe. There is always another one worth telling.